Hey guys, it's Bryan Karp, aka Mailbox Money, and I have a really special treat for you guys on the Brick to Brick podcast. I don't just have a professional insurance agent and broker owner. I actually have the insurance agent that gave us the insurance for both of our multifamily properties in Tennessee. So this is not a podcast that you guys are going to want to miss. We're going to dive deep into insurance, and we're even going to unpack how today Andrew is helping Anthony and myself get money from the insurance company to rebuild one of our properties. So welcome, Andrew.
Thanks for having me.
Of course. All right. So people find insurance sometimes to be boring and to be not exciting, but I'm actually very excited about it. I always like to start, how did you get into the game of insurance? How did you pick more commercial insurance? And then how do you now own your own agency?
Originally I was in the mortgage business up until around 2008 when, if you remember, there was a Great Recession.
Yes.
So at the time, we were finding that people were actually underwater on their homes. So at that time I left the business and tried to get, I had the sales background, and I tried to get into a sales role, and really nothing was hiring. But insurance really didn't miss a beat. So it's something that is recession proof, and at that time is very important to me. So my skill set was more of the, reading comprehension, and I was an English major. So that's not the finance side of the brain. So insurance was perfect because it was a product that you really almost never know everything about. You're learning something every day. Combined with my sales experience, it was the perfect fit. So that was June 2008. I got licensed.
Oh, there was blood in the streets.
Yeah, 2000. I don't know, a lot, if you're around to remember, but like for some younger folks, they don't really know how bad it really was.
I was slinging real estate, or trying to sling real estate in 2008. I think I sold 2 houses that year.
Yeah, it was tough. It was tough for everybody. So did that up until 2016. I was working with various brokerages, really focused on real estate and construction and hospitality. Okay. That's all I do.
Real estate, construction, and hospitality. Okay.
So the hospitality, restaurants, and hotels. We do a lot of hotel portfolios.
Remind me that I have to introduce you to one of my buddies who owns one of the largest limousine companies in Long Island. Okay. And he's really in the hospitality space.
Oh, so
it would be a great contact.
Absolutely.
It's our podcast. I could stop it in.
Yeah. So and then, we did a lot of multifamily real estate, assets all over the country. My job essentially as placing the insurance at these other brokerages was to, someone's buying an asset. It could be Atlanta, Georgia. My job was to figure out, what is the building? Is it multifamily? Is it commercial? Is it shopping centers, industrial, warehouse, whatever. And then place the insurance. And, again, I did that for an agency. And then in 2016, had the audacity to think I could do it better myself.
I love that.
Saw some processes that I wasn't really happy with, and wanted to see if my way was better. And that was, we've been running since 2016 ever since.
That's crazy. It's almost a 10-year anniversary.
Yeah, February was 10 years.
Oh my God, that's incredible. I know when you're starting insurance, it's so hard to get carriers to work with you. So how did that look? Like, how did you get people? Of course, you can go out to the public and sell and help people, but then you have to be able to place the insurance. What is that?
Yeah, so that's a challenge that even we feel today. It's, as we're not a large national brokerage where they just have every insurance company, we really have to grind and find the insurance carrier, and then meet with the marketing reps and say to them, look, like, this is how much business we're able to give you. This is our portfolio, and see if it's a right fit. So it is a huge challenge. And sometimes, it's tough to even just get a market because there might be a moratorium on appointing new agents. So it is a challenge. There are wholesale insurance brokerages that have access to direct markets. So if we don't have one, we could access everybody it's whether it's direct or not. So we get there basically. Mm-hmm.
But you would say your specialty is really commercial, which would be multifamily, hospitality, and construction?
Yeah, so we do no personal lines, which means there's no personal auto, no homeowners insurance. It's really, we really deal well in the multifamily space. We also insure office buildings and in shopping centers. And, a lot of what we do is we try to find real estate owners who have more than one asset, and we try to create a master program for them, because economies of scale, better premium, better coverage. So that's a big part of what we do. And
Is there anything like a blanket insurance that you could put over a portfolio?
yeah, absolutely. That's what we try to create.
Really?
And, you know, clients.
See, this is my podcast, so I get it. So I have 20 multifamilies. You'd be able to create a product that could just go over everything?
Absolutely. So we try to find, you know, that type of.
This is why he wanted to be on the Brick to Brick podcast, so he could pitch me on doing that. Yeah, why you got to look at my portfolio?
Absolutely. And you know, number one, again, coverage premium, but administrators. I mean, if you have 20 assets, you have 20 effective dates, 20 expiration.
Yeah, we get them all lined up. We get them all. We pay them all in one shot. Then we have them all lined up. Like 10 of them hit in August, the other 10 at different times. And I've had one company that, because I gave them all the assets, started giving me like more discounts than anyone else has. So I'll definitely have you take a look at it. Yeah, absolutely. It'd be so much easier to just have one over the whole portfolio.
Yeah, I mean, we have a shopping center client. We have a master program for his 2 shopping centers just because it made sense. So, so that's something we really look to do. And even with the assets that you have down south, we're looking to do that as well.
Okay. Yeah. So talk to me about, so how does it, I know everyone's always, and this is what I learned, everyone's always trying to, Andrew, like cheat out of insurance. So they're always trying to get less insurance.
Yeah.
But I feel like it just like talk to them about it. It doesn't just bite. Like, in my opinion, the insurance company goal is to not pay the claim. So if you lie, like a lot of these investors that are fix and flipping, I know people who do that and they just get like a landlord policy and they don't get the right policy, and God forbid something happens, then you're up a creek without a paddle.
So we deal in asset protection. You know, you're getting this, you're taking on investors, you're buying this asset. What we're offering is what happens when it all goes wrong, right? So when you're just trying to save, you know, as much premium as possible, it's a race to the bottom with coverage. And you know, you obviously, like, we don't write insurance policies more expensive. If that was the case, we would be out of business, right? Mm-hmm. We won't go in and say, hey, look, you know, we're going to double your insurance premium, you know, do business with us. No, we try to find you the best rate, but coverage is first. And to speak to that, you know, with the insurance companies trying to deny a claim, you know, my philosophy is the purpose of insurance is to insure, right? And the insurance companies have adjusters, and there's a gray area in insurance. It's a huge gray area. And the insurance adjusters may try to get into that gray area to not pay a claim, and our job is to get into that area to get the claim paid. So for us, what that looks like is, as soon as there's a loss, got to get the adjuster there as soon as possible.
Are you able to appoint the adjuster? Or
no, the insurance company, it depends, right? So the insurance companies have their adjusters that they send to the premises. If it's a small, you know, under $50,000 claim, typically we assist in the adjustment with the company insurance adjuster. If it's a large, massive fire, then a lot of times it makes sense to bring in a public adjuster, which works really just for the client. But so we do both. Sometimes we bring them in, sometimes we adjust.
So you actually stay on almost like as the consultant for the client,
absolutely,
when a loss happens. So it's not like a loss happens and now they're sitting there and trying to figure it all out. You're there.
The philosophy of our agency is, like, you know, the mission of our company is how we help you when things go wrong. Yeah. We want to make sure we honor that contract that the insurance company made with you. So you know, when you have a loss, we get the adjuster there as quickly as possible, restoration and rebuilding start. And our job from there, the clock is ticking. We got to get you that check as quickly as possible so you can rebuild. So that's our philosophy in that respect.
See, which is like, you know, like, guys, you got to remember, we're talking big multifamily, big commercial, big hospitality, where when there's a loss, it could be 6 figures plus, and the ownership in the group doesn't have that capital to rebuild. So now they're sitting with an asset that isn't doing what it's supposed to be doing. Yeah. And it's just, they're losing left and right.
It's about speed. Like, we want to get you back up and running so you could start getting your income in from, whether it's, you know, a business or a tenant.
Talk to me. I got so much to dive into. I'm excited. I'm enjoying this. Talk to me when an asset is brought to you. How do you like value it on replacement value? Do you do it on what kind of income it's generating? Like, how does that look?
So you say, hey, I'm buying this multifamily somewhere in the United States. First thing we do is go on Google. We see where the asset is. And square footage. We get to square footage. What's the total square footage of the asset? And then each regionally, the dollar per replacement cost is different. So if it was by $1 per square foot, so we find out what's the replacement cost, $150 a foot. Okay, fine. Then we multiply the square footage by that number, and we get close to the building valuation replacement.
Where do you get the value of the $150 a square foot? So obviously we have Dyersburg, which is rural.
Yeah.
And then we have New York, which isn't rural.
So they have software. Basically it's the same software that the insurance companies use. We basically pay subscription, so we have access to it. It's called Marshall and Swift. We run the valuation. It depends on the finishes of the building as well. There's a lot that goes into it. We get that number, then we apply it to a statement of values, which is basically all the buildings in that community, and then we come up with a total insurable value.
So that's top line value of that.
Yeah,
exactly. The asset. Okay.
We look at that, and then we add in the annual income, which is the rental income, and that's how we get to the total insurable value. And then the property rate is based on that number.
What do you mean the property rate?
So, all right, so you're paying a general liability premium and a property premium. Those are the two components of your insurance policy. Mm-hmm. The property premium is a rate on the TIV. Okay. So we shop with the insurance companies to find the best rate, but the TIV, the total insurable value, is staying the same for your asset.
Gotcha.
And that's what we do. And then we get creative with deductibles and other things, other ways to maybe take on a little more risk or take on less risk depending on your
risk tolerance.
Yeah, risk tolerance.
Right. Like Andrew insured the building of my commercial office building.
Yeah.
And it wasn't like Andrew said, hey, Bryan, you guys as Coldwell bankers should pay for this. You basically gave us a menu and said, what's your risk tolerance?
Yes.
Depending on what you want to.
So we definitely err on the side of caution. We're a little more conservative by nature, but yeah, so that was a umbrella liability limit issue. And at that point, it becomes, well, how much premium do you want to pay for this limit? And it ultimately becomes a decision of the person buying the insurance. Mm-hmm. So we advise as much as we can in that respect.
Okay. Now, there's a word for this. It's almost serendipitous. I don't know if that's right.
Yeah.
But it's almost like, what are the effing chances that on Monday, I'm sitting at my desk, drinking my coffee. It's about 8:30 in the morning, making my phone calls, checking emails, and I get a text message from my property manager in Tennessee. He said, hey, I don't have great news. There was a fire at your asset.
Yeah.
And I said, what are you talking about? And next thing you know, we get how your phone sends you photos. It does it photos. And we see black char everywhere, police, and we just see fire damage everywhere. And just to fill you guys in, and then Andrew's going to walk us through what's going on and what's happening in real time, in real life. There was a dispute at the property, and this crazy person poured an accelerant into one of our units that was fully renovated. It doesn't get any worse than that.
Yeah.
You literally finish the paint and someone's going to destroy it. He sets that unit on fire and then goes to try to set his dad's unit on fire. So we had arson. Plus, the worst thing about fire is that smoke just destroys everything. So in real time, what's going on in our...
Yeah, so in this type of claim, that's the nightmare scenario, right? You got everything done, you're renovated, and all of a sudden, your hopes and dreams are shattered by one fire. So our position there is, all right, look, don't worry about it. We're going to make sure that you have the money to rebuild. The only loss for you, if it's done right, should be the deductible. And that's the part that you self-insure, right? So from there, the first thing we do is, we have to basically, you fill out a small form to show us the date of loss, what time, what happened, and we send that right to the insurance company. Then our job in my office is we got to get that adjusted there as quickly as possible. Once they get there, that's going to be, okay.
I'll interrupt you.
Yeah.
Are we allowed to start fixing it up, or we have to wait for the adjustment?
So yeah, it's a great question. So a lot of time, what we try to do is get as many pictures as possible to kind of get started. Ideally, the adjuster is going to want to see the extent of damage before to adjust the claim. So you could start cleaning up, getting the restoration guys in there, but I don't recommend start rebuilding yet until the adjuster's on site. So the lead time is big. We want to try to get them there in a day or two if we can.
Especially, and you have to have adjusters everywhere because we're in rural Tennessee.
Well,
the guys are gonna need a helicopter to get to our complex.
Well, the insurance company that we chose writes business in that geographical location. So they're they have the adjusters to deploy to that site. So that's, for that unit. And then there's also the smoke damage, which damage other units. So, that would be covered in the claim as well.
What about loss of rent? Does that, so after realize we had someone literally with a lease sign for October 1st, and now we're sitting, like this.
Yeah. So what will happen is if it's a covered cause of loss, meaning something like a fire, the business income is what the coverage is called, will trigger and they will give you the rental reimbursement.
Okay.
Right. And there's a whole calculation for that, like how, and it's going to stipulate based on the lease and everything like that. So that gets added to the entire claim and then less the deductible.
Okay. So I feel like for this nightmare, it's going to end up not being a positive, but it's end up going to work out in a positive manner because we had the right insurance. Is that
Absolutely. Yeah. At least it can get you. It's a blip on the radar, right? It tries. You want to try to get up and running as quickly as possible, but ideally, the idea is to not take on the entire loss yourself.
Right.
You're buying an insurance policy to transfer your risk to the insurance company, less your self-insured deductible.
But now it's going to, because Anthony said this to me, he's like, wow, why couldn't this happen? Because our anniversary of owning the asset 1 year is October 18th. So why can't this happen on October 20th? Because now we don't look at like a great insurance risk for the next counter.
So because it's October 18th, we were already working with the underwriter to provide the renewal. Mm-hmm. So we're already in that process. So it just remains to be seen how the loss is going to affect the renewal. But yet typically it's not the greatest news from a renewal premium standpoint. But look, that's why you buy the insurance. Yeah. And, our job is to make sure if there is an increase to kind of, blunt that as much as possible.
Is it something that looks like is egg on your face with your carriers when your clients are putting claims in, or not at all?
So great question. There's the shock loss, which is the large claim out of nowhere, could be a couple $1 million that just kind of happens randomly. What the insurance companies do not like is the frequency, the high frequency of claims. So if you have a fire or two over the course of a 5-year span, they don't really look at that too negatively. But if you have every month, if you're like, $10,000 pipe burst, like I really try to get you to put in, look at the insurance as catastrophic.
Yeah.
Exactly. So because once the underwriter sees that, they see 5 or 6 claims in 1 year, and they're all small nuisance claims. The insurance company will get that money back from you.
Yeah, because they're looking at that you're using the insurance as almost like you're like a, I don't know what exact word is.
I
could just say for my New York portfolio, right, of 20 properties, we never put a claim in, and I almost self-insure everything. I'm using it for if the building burns down.
Yeah, exactly.
Then I'm going to call my insurance person.
Yeah, and then you could also at that point look back on a 5 to even 10 year trailing to see maybe I should take on a higher deductible.
Right.
And self-insure a little bit because we've had a good track record, take some upfront premium savings. But again, that goes to risk tolerance.
Now, I feel like the insurance is multi-leveled. So we just talked about you helping us because we just had a catastrophic fire. But what about like the lawsuits and the frivolous lawsuits, and then the slip and fall and the person who falls down on a piece of banana peel and all that stuff?
Yeah. So everything you were talking about was first party property insurance, but the other component is general liability, which is third party, which is someone other than you calling in a claim against your insurance policy. Now, the type of claims we see with that are a lot of slip and falls. Especially the biggest thing is slip and falls on ice, and it's tough to combat. You want to try to put the salt down and make sure that everything's clear. But those are the hardest. And then the other big thing is the contractor general liability losses. So, if you hire a contractor, the contractor's working on site, one of their employees gets hurt, they sue everyone involved. They sue the property owner, and what we want to try to do is through contractual risk transfer is tender that claim or transfer it downstream to the actual contractor's insurance policy. Okay. And that's just one aspect of the risk management that we provide. Otherwise, loss control, walking the property, making sure those cracks in the sidewalk, people really do fall in that, and that's where they allege the negligence on the property owner. So we try to make sure you get that fixed up, which you guys had to do that, I believe, recently, right?
Yeah, we had to move. We didn't have anything happen, but we had to fix sidewalks and
exactly. Nonsensical. That's great loss control. So that's preventing it before it happens. So between loss control and risk management, those are the tools that we have to to prevent claims as much as we can, because things are still going to happen.
I feel like we live in such a litigious society.
Yeah.
I feel like it's just like, it's got to be such a frustrating position to be in when, you're advising your clients properly, they're doing the right thing, and then you just get this person for no reason that just, like, they're looking for their payday.
Also, what's interesting is you'll find the litigious society is state by state. So New York may be worse than Tennessee, for example. But at the end of the day, look, they're gonna, if someone gets hurt, they're gonna reach out to a personal injury attorney, and they're going to try to come after the assets of the of your asset. So we really want to try to prevent that from happening, and the vehicle to do that is an insurance policy.
It's not just having an LLC, it's really having an insurance policy to protect when they're coming for it.
Absolutely. Because at the end of the day, when they come after you, there's two components. It's the defense costs, right? So you'd have to pay an attorney on your own if you didn't have the policy, and then the indemnity, which is the settlement. Now, unfortunately, in the general liability world, you guys don't have consent to settle, which means the insurance company takes on the burden of the defense costs, but they may decide, to settle, even though you think it's frivolous.
Yeah.
You're going to say, hey, look, this guy didn't fall out here any of the property. And the insurance company might say, look, it might be less expensive for us to just settle this. Actually, that kills me. And that, unfortunately, that's just like a necessary evil, but there's not much of a choice you have with that. That's the biggest problem that I have from my insurers. And I don't blame them, Yes, it's tough.
Now, you've had an amazing niche in the construction world. Can we unpack that and you tell me what that looks like and how you've been such an incredible advisor?
So I like construction because it's one of the harder placements. It's very nuanced, and there's a lot of things that you could do creatively to keep the premiums down and really control the long-term loss control. So I do ground-up construction of multifamily developments. We also insure every subcontractor, from foundation trade contractors to roofers. And
so, excuse me, but so back to that. So when you're thinking about Andrew, it's not just your multifamily, it's not just your, commercial buildings, it's not just your hospitality. It's also if you have a roofing company, a siding company, a foundation, any type of trade, you also insure.
Absolutely. So, and ideally when, we provide a project specific policy for one of our clients, if they're using a trade that we insure, it makes the process much easier because we already review their policy to make sure it's acceptable. So when we do a construction project, we review every subcontractor's insurance policy. So when we're insuring the trades, it's already reviewed it because we're insuring them.
So like, for example, my office building, we had Kelly Development as the GC.
Yes.
But let's say, Bryan Asphalt came in to do the blacktop asphalt. You said before you guys come on site, had to send over their insurance policy. You guys reviewed it, made sure everything was covered.
Absolutely. So in that situation, we insure Kelly Development Corp as the general contractor. But then Kelly Development Corp has an exposure from the subcontractors he hires, as well as the owner has that exposure. So what we do is we want to make sure that asphalt company has the right insurance, and it's an ironclad contract that if something happens where their employee gets hurt on premises and they file suit, we can transfer that claim down to the asphalt contractor. And the reason why that's important is while you do have coverage for the asset, the next thing that you decide to do, whether it be build another building, the insurance company is looking at the loss history. So we're actually controlling the premiums on your next project.
Unbelievable. So it's almost like I feel like I need to have, like, you're like an advisor, right? I have my attorneys, I have my bankers, I have my financial advisors. I also need my insurance guy to advise on all of these different.
That's how we position ourselves. We are business advisors. It's not, again, when you're writing these premiums, the cheap premiums, cheap coverage, it's a race to the bottom. And ultimately, the owner or general contractor will get hurt in that respect. So we're all about asset protection, basically.
Mm-hmm. Who are your typical clients that you're looking for the phone to ring every day and that you feel like you can bring the most value to?
So we do a lot of condo associations, the garden style apartments with the, 2-story, maybe there's a tennis court and pool, gated community. So we have about 30 of those on Long Island. So that's kind of how I started in the business. So we love writing those. Developers building anything, we insure them, and then the trade. So those are our ideal clients. And then the hotel portfolios are great also. Usually there's a restaurant component in there. So, those are fun. But we just, we're mostly word of mouth. We meet through networking. And, usually it's, unfortunately in my business, in order for me to get hired, someone usually has to get fired. So we look for clients that have some kind of problem. So if they love their insurance guy and that they're doing the right thing and everything's good, there's really no reason for us to get involved. But it's when the phone rings for us when we're referred because we need to solve some kind of issue.
Right. And I feel like what happens is somebody starts off with one asset. So it's their aunt's uncle's friend who insures them. Then they get a second asset, a third asset. Then they really need a team of advisors to really be looking at the policies. Because I feel like you're right. It's a race to the bottom. Just, I have insurance, but do you even know what the coverage is? Do you even know what the loss is? Like, do you even know?
So a lot of that is, you guys don't want to know. You want to just trust that we know, right? So I do like to educate my clients on the process, but a lot of times you really just have to lean on expertise. So.
That's awesome. So talk to me about the structure at the company. I've been lucky enough to spend time in your office, which is beautiful. How many people work for you? What are everyone's different roles? What's your day to day?
Yeah, I mean, so we have a total team of about 7 people, and that ranges from account executives to, people who just do certificates of insurance all day long. And then, obviously an accounts payable team, bookkeepers and everything that you need to run a business. We really try to pride ourselves on customer service. Like if you need something, we're accessible. We get back to you right away. A lot of times we get clients that, they're just like, hey, my broker's not calling me back. And that's just for us, that's low hanging fruit. It's just like, well, we're there for you. We have your back. That's the whole point of this entire thing. It's when disaster strikes, we're there for you.
Okay.
So.
What is the, I guess in the insurance world, where are you guys seeing the insurance world going? Do you see that everything is getting more expensive or things getting cheaper? Like, where do you see insurance as a whole?
Okay, so the way insurance works, it's based on a hard market or a soft market, and that does not necessarily follow the economy of the United States. So, in a hard market, carriers are really raising rates and and providing maybe higher deductibles and not writing as many risks.
Why is that?
Well, because there's too many lawsuits and they have to kind of adjust their premiums.
Okay.
So and that's lawsuits, and on the property side there's high claims and capacity and natural disasters and things like that. So we happen to be in a hard market right now. In a soft market, it's companies are coming into the market, the premiums are lower, there's better coverage, and it's better for the consumer. Last few years, it's been really tough because it's been a hard market. So unfortunately, the insurers have been feeling the brunt of that. And for us, it's just our job is just to find the best possible out there at that time for our clients. But yeah, until people stop, suing each other, it's not going to get better.
I don't know if that's ever going to happen. This might be like a tough question, but I think it's everyone wants to know, and I would want to know it as a business owner. How do you, as an insurance broker, get paid? Right? So are we paying you? Are the carriers paying you? Do you do this is it a non-for-profit? Like, how does it work?
Yeah, so we don't fee at all. There are some brokers that do fee, but for the most part, the insurance carrier pays us directly, whether that be through, there's 2 types of billing, whether it's direct bill and they bill you directly and then they send us a commission, or sometimes it's agency bill where where you have to come up with a third-party finance company, which we will provide, and then they pay us directly. We send the money to an insurance company sends back our commission.
Which we're doing on one of our projects because they said for 5%. They would loan us the money. It sounds crazy, and we have the money in the account, but we rather use the money to run the business, right? So talk about what we're doing.
Yes, I have clients that do both. I have a client right now is building. It's a $600,000 insurance policy. It's ground up construction of apartments, and he got his construction loan, and his construction loan interest is a little higher than what the premium finance company is. So he'd rather finance the premium. Some clients pay in full because they look at the bottom line annually. They don't want to pay the interest at all. And then, some clients really don't have a choice and they have to finance. Right. So it all depends.
And there's separate companies that will finance the policy for you.
Yeah, exactly. So there's a host of third-party finance companies out there. We deal with 2 specifically, and they give us the best rates. Their customer service is great. Open for questions, cancellation, ACH billing. So there's reasons why we use the ones that we use.
Talk to me about some of the craziest insurance story you've ever had in running this operation.
I have so many.
Well, so give us the one that sits at the top of your brain that is just like the one when you're at a dinner party that you just can't help yourself.
Okay, so we have a real estate portfolio, and they have this small auto policy, and it's tied to the auto, and they one of the owners lent his vehicle to his friend, and his friend hit a motorcycle, and if you hit a motorcycle, that's like the worst claim for an auto.
Really?
Yeah. So it was a $1.5 million claim payout, which is not the highest I've seen, but so it hit their auto policy, and then it hit their umbrella for the extra $500,000. So that affected the entire real estate portfolio. So this little auto loss, not little, this auto loss hurt the entire auto portfolio. So then we moved insurance companies because the insurance company said, look, we need to get this premium back. So they provided us a really high renewal. So we shopped it and found a better deal. So we go to the better deal. We get them kind of where they were paying originally for the real estate portfolio.
I see where this is going. I see where this is going.
Within 2 months, it was a $2.5 million fire, which was caused by the HVAC system. So we were trying to go after the HVAC contractor to service the system, but we weren't able to subrogate, unfortunately. So it was like the motorcycle accident. They had a clean claim history, and then like one after the other. And it just was like, we're just trying to figure out how to best mitigate this and keep the premium as low as possible. It was tough. It was over $3.5 million of losses. Yeah.
Well, it's just incredible having you on the team to like move around. Yeah. I got 2 questions. How is the car that the guy was driving was underneath the policy for the real estate?
So yeah, there was this small auto policy that was in the business name. So we placed it for them. It was there 4 vehicles, and they wanted to set it up that way.
Right.
That's how.
Probably in hindsight, the real estate.
Absolutely. So I never do that anymore. I learned my lesson.
Yeah.
Mm-hmm. So
that's so interesting. And now, isn't the carrier it's got to be tough for you because you're always doing the right thing for your clients. That's number one. But also, you got to keep relationships with these carriers, or you're not going to be able to place. So were they upset that they're going to jump the premium to get their money back? So are they upset that you pulled the portfolio and brought it somewhere else?
So then the conversation there is like, well, what do you want us to do? Why should they pay another couple $100,000 in insurance? So they understand that. The bigger bad conversation was with the new company that we just placed it with the $2.5 million fire.
Yeah.
They're like, what are you giving me here? So then it's like, but across our whole portfolio, it works out.
It's got to be tough. Like you're always trying to back and forth.
So ideally, what we really try to do is keep you with the same carrier and say to them, look, the guy wants to stay here. Don't kill him on rates.
Yeah.
Keep it.
And look at where he's done, and he's never done any claims.
Exactly. But unfortunately, it's not. A lot of times it's not, it is very insured specific, but sometimes it's just the market. And if that insurance company is taking on losses for other clients, they have to raise the rates. So then we just move coverage.
Yeah.
No, we jump from one to the other.
All right. Well, that was a great story. Give me one more story.
One more.
What was the biggest claim you ever had to?
So in New York State, there's a scaffold law claims. Every one of these scaffold law claims, basically, it's a strict liability imposed on the owner and the developer. So there's no defense, right? So you're just guilty.
It's like when you rear end someone, right? Aren't you 100% guilty?
Well, so like in the construction arena, right? It's typically comparative negligence in every other state. So you get to defend yourself. But in New York specifically, what happens is you're guilty, essentially, if you're the owner or the general contractor. So in this case, so those claims are always huge. So a lot of times what we do is, half of them are fraudulent, unfortunately. We try to transfer those claims down. One guy, a roofing contractor, the job was finished. There was extra copper on site on the roof. And he told his employee, you guys can take this if you'd like, because it's valuable. And he threw the copper off the roof, and it hit his buckle, and he went off the roof. And he had to have back surgery, and I think that was around $3 million also.
Oh my God.
Yeah. So those claims are typically the higher ones. The construction-related losses are the largest. We've had unfortunately fatalities as well. But yeah, that was a big one. I had a motel I insured where There was they were lighting a candle at 4 a.m. in the room. The bed went on fire. They took the bed, threw it against the wall. It took out 6 units in the motel. It's just like, I was on site for that. I was there. It was like 4 a.m. I went, it was 6 a.m. by the time I got there. And, it was just a crazy scene. Oh, that was another crazy.
Oh my God.
That's because 6 units out because, one guy basically.
You shouldn't be lighting candles if one means.
Exactly. So
I consider you on the stories.
All right. Well, my crew in the background is telling me to wrap it up. We've had too much fun here. Andrew, how can people get in touch with you? What's the best way to find you? And I can't thank you enough.
yeah, so we're all over social media, www.thesankisgroup.com. Obviously I'm sure we'll have my cell phone.
You can put it out there.
Yeah.
There.
How do you 631-478-1852. Always feel free to call me direct with any questions.
Guys, listen, so when you see Andrew, you're thinking all type of commercial real estate, all type of multifamily real estate, and even if you own your own business, contractors, right? This is a home run for you. And I personally use Andrew multiple times, and I have nothing but amazing experience. It's a real advisor. That's what you need. It's not just, insurance person trying to give you a cheap quote. Thank you so much for watching. Subscribe and like. And remember, if you guys want to invest in multifamily real estate, set up an introduction meeting with myself and Anthony. This Future Gen REI, we are raising capital for our next project, and we're so excited to have you guys involved.